Good morning. So we've got Karen Beckingham here with Verico OneLink, and I'm Nicole Hacault with Royal LePage Top Producers. So we've had, our world was kind of rocked last week with like announcements of like changes CMHC were making. And now we've had enough time to like think about it and observe. And now we know those changes really aren't going to affect us too much. So tell us all about it.
Well, CMHC had made a decision to make qualifying for your mortgage just a little more restrictive, a little tighter. There's two ratios that are looked at for financing. One's called your gross debt servicing ratio, and that is how much of your income can you use to make mortgage payments, property taxes, and a small component for heat. Then there's your gross debt servicing ratio, and that includes those three items along with any liabilities you have, like student loans, car loans, credit card bills. So what they've done is currently with good credit, 680 and up, you can go 39% on that gross debt servicing ratio. So that's your mortgage payment, and 44 on the total debt servicing ratio. And so that includes any liabilities like car loans and such. They had reduced that to 35 and 42, which was a dramatic reduction in affordability. There's a little bit of panic over it because typically CMHC, if CMHC makes a change, there's three default insurance companies, CMHC, Canada Guarantee, and Genworth. They all follow suit. But this change at CMHC was done by CMHC. It wasn't a legislative change by the finance minister. So Genworth and Canada Guarantee didn't have to follow suit, and they haven't. Now, are they going to maybe be a little more cautious on some of the other items that CMHC had decided that they wouldn't insure anymore, which was borrowed down payment, and they wanted to make sure that someone's credit score was up into the above average range before they'd lend them any money. I think Canada Guarantee and Genworth, they haven't changed any of that, but they may become more cognizant of the risk that they're taking on those types of items. So has it had a major impact? No, not really. Will CMHC change their minds? I don't know. CMHC, they have the right to make the decisions that they need to protect the portfolio that they're taking care of. They may, after a while, decide to alter and go back, or Genworth and Canada Guarantee may decide to become a little tighter. It really is all dependent on what happens in the market over the next number of months. The economists, we've got a whole range of predictions, but these predictions are based on information from prior situations that are nothing like what we're in right now.
I saw a quote, granted this is from the States, but I think we can agree that the States is more volatile.
Yes.
In terms of things, right? And it was an agent in the States, and she had posted that, in 2008, the housing market caused the recession.
Yes.
And in this case, the housing market is going to fix the recession. Yeah, it's what's going to keep it alive and going.
Yeah, I agree. I think in Manitoba especially, we're so protected. We've got, exactly. Yeah. We just plod along minding our own business. And I really don't think we're going to see any dramatic changes. Can there be a little bit of a decline in market values? There always is a risk to a little bit of a decline in market values. Other major city centers in Canada, they are in a higher risk position. Their property values were higher to the point where CMHC and the default insurance and the finance minister were making regulations to try and control those markets. Well, in my opinion, this has kind of done it for them. It's kind of, controlled those markets and maybe brought the market values down to a more affordable level. But it'll take time for all of this to show through. And in Winnipeg and Manitoba, we have really got nothing to worry about.
No, like if anything, property values have been going up right now. So, a lot of people are worried about the value of their home, but they're actually going up.
Yeah, exactly. So I think we're very lucky to live where we are.
Oh, absolutely.
Yeah.
So I guess like the message for people who are going out to get a mortgage right now is just to, with like regards to like who you work with and getting your mortgage, knowing your mortgage products. And because there are some lenders who only use CMHC, correct?
Yes, there are.
So I think it's important, like if you get like a decline, ask who their insurer is and know that you have other options, right?
Exactly. And this is one really good reason to work with a mortgage professional that has access to a number of different lenders. All mortgage products are slightly different. All mortgage companies like slightly different clients. They've got their favorite clients, and they've got their least favorite clients. And it's our job to know that and to know where we're going to direct our clients. Now, that being said, CMHC's decision to go with the ratios of 35-42, a lot of the more traditional lenders already were using those ratios. We have access and had access to the higher ratios. So a decline at one place doesn't necessarily mean you're declined. It just means that lender wasn't happy with the client that they were looking at, or maybe even the property that they were looking at. So it's a good idea to make sure that you're dealing with someone who has the ability to shop the market, make sure that after reviewing your situation, that they know exactly which lender is going to be most happy with your application. And it's not all about rate. I mean, there's, as a competitive situation, the mortgage specialists, mortgage brokers that have multiple lenders, typically we can find rates that are as competitive, if not more competitive, than what you're going to get on your own by walking into your financial institution. But we also are going to be able to take those rates and analyze whether, this lender that has 2.29, is this product going to work for you, or are we going to get a decline? So, and a decline is, it isn't because you're not worthy of it. A decline is you just didn't fit that particular mold.
Yeah. Okay, awesome. I think that's a lot of information for everybody. And if you have any other questions about mortgages and what these little bits of changes mean, you can always reach out to Karen or I.
Yep.
Okay.
Love to talk
to you. Everybody.
Okay, bye.